Hello everyone and welcome to the channel. My name is Brent, and in today's video we're going to go ahead and cover the indexes so far here on Monday. We opened negative, went positive throughout the day. So we're going to go ahead and take a look at our M1 Finance buys of the week that we've already initiated. We have 4 options that are expiring here on Friday. I believe one of them may close in the money, so I may have to have my stock assigned, but I believe the other 3 are completely fine. So we're going to go ahead and we'll cover those here in this video. But otherwise, if you are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time I release a brand new video, and of course give this video a thumbs up, make it blue, and let's go ahead and get into the video. I put a poll earlier on Sunday or late Sunday, as far as what investors are doing here this week. It seems like the majority are split between buying and holding, so it looks like maybe 9 and 9 are split between buying and holding, and 1 is out there looking to sell. So kind of interesting. I did have a couple comments as far as people are buying and doing some options. So I've seen the options as the big topic here on YouTube right now. I know I started doing options over on my Merrill Edge platform, and then it just seems like I'm getting a ton of options video. Let me know down in the comment section below if your feed is the same way. Obviously, we're going to be discussing options towards the end of the video. But really quickly, going into Tuesday right now, the markets, stock futures have been kind of negative, but they've been kind of fluctuating. We see right now the NASDAQ, as I refreshed it, the NASDAQ went positive by 0.05%. I would really like a pullback, and the reason for the pullback is the Fed is coming out here with inflation numbers here on Tuesday, I believe it is. So I'm really hoping that inflation is ticking higher. I want a pullback in the tech stocks right now. I want the market to pull back. That's what I want right now. I don't want the market to keep chugging higher and higher. I really just want it to go pull back a bit. So I'm going to go ahead and not really read through this, but I'm going to go ahead and just kind of go through it. You guys can pause it, take a look at the information. Not a whole lot until Tuesday when the Fed will come out, Jerome Powell, and go ahead and talk about the current rate of inflation here in July, if they see any difference as far as deflation or inflation between June and July. So that's something that I'm looking forward to here on Tuesday. And we can see here on Monday, as far as the one-day performance, the FANG stocks kind of split half and half. Apple down by 0.02, Microsoft, Apple also negative, whereas Google, Tesla, Disney, Facebook were all pretty positive. So it's kind of a mixed market out there on Monday. Overall, though, the S&P was up by 0.35% here on Monday. The Dow Jones was up 0.26, and the NASDAQ was up 0.21. So I believe that we did hit some intradays, some intra all-time highs here on the S&P 500. And we did pull back just about 2 points off those highs, just a few points looks like. But, continuing to close at new all-time highs. And here I am really wanting this market to pull back. So if inflation numbers are showing positive, if it's showing inflation numbers moving higher, I believe the tech companies will pull back a bit. That'll kind of help the market kind of take a breath, and hopefully kind of pull back there. Now, jumping over into the M1 Finance platform, we did make one buy here on Monday. It was kind of last minute. I completely forgot that last Friday, Hormel Foods was going ex-dividend. So if I go here over to my Seeking Alpha and I select dividends, Hormel Foods went ex-dividend back on the 9th, which was last Friday. I didn't get a chance to deposit the capital that I wanted into Hormel Foods in order to kind of bump up that position. But what had actually happened here is recently Hormel Foods has been pulling back. So Hormel Foods is down by 1.10%. So this is kind of the opportunity that I was kind of looking for. Right now in this market, a lot of positions are out there trading near or at all-time highs. And I was kind of looking at it. Do I want to just dump, a set amount into these positions to just kind of maximize the dividends for the remainder of 2021? Or do I want to slowly dollar cost average? Now, Colgate, for example, it is positive by 1.65%, whereas Hormel Foods is down by 1.10%. And I have a few other positions in here that are currently negative as well, such as Merck and Clorox that are new to the portfolio. Now, I will more than likely focus on Colgate, Hormel Foods, and Merck, especially if they're negative in the portfolio, up until I build those positions to, anywhere from $1,000 to $2,000 of equity here in the upcoming sort of weeks and months, unless I find something else out there that is a better opportunity. So kind of going quickly over the portfolio, on the 1 day, this is up roughly 0.25%. So again, if we compare that to the S&P, just slightly below the S&P, in line with the Dow Jones, and a little, same thing with the NASDAQ there. So overall, doing pretty good there in the markets. I didn't get to capture the 1 week performance, but overall, I believe last week was fairly positive in the portfolio. Right now we are sitting at all-time highs as far as the portfolio goes. And the one stock that we did purchase last week, or actually, I'm sorry, this Monday, was Colgate. So we purchased $228.26. A little bit of that was dividends. So we were able to buy 2.75 shares. We did average up to 82.98. I noticed when I went ahead and updated my tracking, my dividend tracker, that I had actually increased my unit cost per share. But I do own now 6 shares of Colgate there. And last week we did receive some dividends, some very nice dividends. One from Merck for $9.63. That's nearly $10 right now. And then Altria, a whopping $17.21. I believe that is the single biggest individual dividend payout that we receive. We no longer have AT&T in this portfolio, so I believe Altria took the cake as far as being the highest yielding and highest paying dividend in this portfolio. So that is the activity within the M1 Finance account. Now, jumping over into the Merrill Edge platform. Now, we do have 4 options that are coming up to expire here on the 16th. So starting off with number 1, we have First Horizon. This one we purchased for not too long ago. We bought it around $16 and some change. We went ahead and set a covered call for $18. Now, on First Horizon, we made $20.34 of cash deposited into our account. I don't mind. We already covered this one as far as their financials. They're all moving pretty positive as far as their revenue, their net income, free cash flow. Their price to book ratio was I believe it was like a 1.3, which is really nice for the financials. We had actually compared it to JP Morgan. So this one, I'm going to go ahead and keep my premium there. I believe that one's in a safe position. So I'll keep my $20.34. That one will more than likely expire out of the money, and options, nothing will get assigned. I'll just keep my premium. Tattooed Chef here, I did aim for the moon here. We kind of talked about that in the movie, in one of our past videos. In my previous calls, I had sold some calls for $22.50, I believe. And during the month of June, Tattooed Chef had actually broke to $22.50. It actually broke to $23. But here in July, I went ahead and set my strike price a little bit higher because I wanted to keep those positions, but I did want to make some sort of a premium here. So I sold 2 call options there for Tattooed Chef. I collected $58.69 in premium, and we can see that the current price of Tattooed Chef is right there at $20. So even if we had sold some covered calls at $22.50, I would have got a much higher premium. That was a little bit more riskier of a play, where those options may have been assigned, but here at $25, we still collected pretty nicely at nearly $60. We're going to go ahead and keep our shares, and these should expire completely worthless. I'll just keep my premium and my shares, and then we'll go ahead and do some more options going into August. The next pair here, I had actually I sold some call options and I sold a put. I sold some call options. I felt it was high because going into July generally does have a higher on average return for the month, but I wasn't expecting the day after day. I think we had like multiple 4 or 5 consecutive days of being new all-time highs, which just hasn't happened in quite a while. Generally, there's a bit of a pullback, especially when we're trading this high. We're kind of playing with inflation numbers. We're seeing, individuals not wanting to really return back to work and not wanting to go back into specific sectors of the, the working economy. So I believe that the market would have had a bit of a pullback. So I thought that this 225 range would be fairly safe. Right now, these options are more than likely going to get assigned, but we shall see. As I was taking a look at, stock futures are kind of mixing right now, so we may end up actually pulling off the current price. So VTI is currently trading at 226.51, so it's $1.51 above my current strike price. So if my options do get assigned at 225, currently I'll miss out on roughly $151. But if the market does pull back, that's completely fine. I am going to be buying more VTI in the future. So I did actually I sold the put for 215, and that brought in, let's see here, my cash secured put here brought me in $20.34. I don't believe that VTI is going to fall to 215, but my current cost basis on VTI is at 220. So if I go up to 225, my current gain on VTI, I believe in my taxable account, is around $400 or $500. So if I am forced to sell at 225, I will, I'll collect roughly $400 or $500 in capital gains, and then I'd have collected the premium of $44.35. So all I'll do is probably just buy another batch of 100. And I'll continue to do covered calls. I'll continue to do puts. I'll probably shoot a little bit higher just because I do not know what will happen in this market if we'll just continue to trend higher and higher. I've been kind of putting off investing everything into VTI at this moment just because I believe here in the short term there'd be some volatility, but I may just end up buying another batch of 100 shares of VTI here after this call option expires, and I'm able to start up another one. I don't want to buy my call option to close it just because there is still that chance that VTI will pull back here by Friday, and that option may end in out of the money, and I'll get to keep the premium. I'll get to keep my shares, and then in the next month I'll probably more than likely just be more I'll just shoot it a little bit higher versus where I did here. I think when I opened up this month, the VTI was at 222, somewhere around there. I, kind of did the calculation. If we gain roughly 1 to 2% here throughout July, that'll kind of end out of the money. But here in July, we've already gained quite a bit. Here, for the 1 month, we can see that as of July here, we've just been kind of trending. We really haven't had much of a break. We had a bit of a pullback right here, but quickly recovered and gained along the way. So those are the 4 call options that we currently have open. We have 1 on First Horizon, 2 on Tattooed, 1 on Tattooed Chef there, but 2 puts. So those are all of our options. Again, we have the 1 on First Horizon, 1 on Tattooed Chef. That these will probably more than likely just not get assigned. They'll just kind of expire, and I'll get to keep the premium in my shares. VTI, this 225 one, that's the one I'm kind of iffing. It may fall below 225, and I'll keep my premium in my shares, but this one may get assigned here by Friday. And then this put, we're so high right now, up at 226, that I don't believe this one will get exercised, and I'll just keep my premium there and probably set another put, below my current cost basis, my unit cost per share, which is 220 and some change. So if I can get 215 and just collect a small premium, I'll more than likely get it, just because I'm not afraid to buy VTI at 215, and that's just a cash secured put right there. So that is basically it for this video. Let me know down in the comment section below again, what are you doing not only this week, but what are you doing for the remainder of July? Are you in that buying mode, looking for opportunities and buying? Are you just kind of holding on to your positions, kind of waiting for the numbers and the market to do its thing? Or are you just kind of taking profits and kind of waiting on the sidelines? Let me know down in the comment section below. I'm really interested in hearing back from you guys. And of course, if you are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it green, hit the bell to be notified every time we release a brand new video. And of course, give this video a thumbs up, make it blue. We cover making money, saving money, and investing money here on the channel. Thank you. Bye-bye.